Congratulations! You found the Santu Pirls Stock Market Commentary for market week ending Friday, December 19th, 2014. Market breadth. With this past week's market decline, our bull-bear point and figure ratio rose from 0.66 to 0.90, rising, but still within bearish territory. The total count of securities in bullish or bearish patterns fell 6% to 2,551. The count of bearish stocks decreased 17%, while the count of stocks in bullish patterns increased 12%. The Santu Pirls P&F Market Breadth Summary Chart shows us a market now 3 consecutive weeks in bearish territory. Paid subscribers have access to the Open Office Calc data from which the chart is generated. You may become a paid subscriber by visiting s2pmarketsignal.com, clicking on Membership, and clicking Sign Up. For those who are interested, a free 2-week trial subscription is available. The well-known market breadth indicator, the Nasdaq McClellan Summation Index, fell 80 points for the 4th decline in 9 weeks. At a negative 80.27 points, it continues below all 9 tops above plus 100 and above all 6 bottoms below minus 100 in the last 3 years. Market Gauge Volume Analysis. In this week's volume analysis, all indexes ended in neither accumulation nor distribution mode. In the last 2 weeks, the Nasdaq 100 Trust had 0 accumulation days and 0 distribution days. Of the other indexes, both the Diamonds Trust and the S&P 500 Deposit Receipts ended in neither accumulation nor distribution mode. Accumulation days are counted when the index closes up on higher volume than the prior market day, while distribution days occur when the index closes down on volume higher than the prior market day. Last week also, the Nasdaq 100 Trust ended in neither accumulation nor distribution mode. Momentum. At market close on Wednesday, 12/17, the CCI 20 Daily had 6 consecutive days below zero for a Woody's trend change to down. However, the following day, it rose back above zero and is now above plus 50, outside the range for a valid zero-line reject entry signal, and appears likely to reverse Woody's trend back to up next week. In Woody's CCI trading system, 6 consecutive bars above or below zero are required for a change of trend. The weekly CCI 20 of the Nasdaq Composite Index began a Woody's uptrend 24 weeks ago, while the daily CCI 20 began a Woody's downtrend this past week. At plus 83.45, the CCI 20 weekly in a Woody's uptrend remains outside the plus or minus 50 range for a valid zero-line reject. Industry rotation the last 2 weeks. All of the top 5 industries are positive, and all of the bottom 5 are negative. Bullish, networkers, and computer hardware have entered the top 5. Gold and silver has entered the bottom 5. Bearish, semis has entered the bottom 5. Brokers, disk drives, and REITs have left the top 5. Oil services and oil have entered the top 5. Focus this week: some serious economic considerations from Sputnik International, outside the mainstream Western press. America's Big Five are plunging the world into another banking crisis, based on an interview with former World Bank economist Peter Koenig. Here are some excerpts. Peter Koenig: I think there is what we would call an impending banking crisis. A new banking crisis is looming on the horizon, I believe. And then, of course, There are many layers to this banking crisis, and many elements to it. The purpose of the planned crisis is to make the rich financial elite richer and actually rob the common people of their savings and of their social system. That has been the case before, and it is certainly happening again. And that's what's looming. Today, about 6 U.S. banks control 2/3 of all banking assets, and that is considerably more than it was in 2008, when the figure for the same banks was just over 40%. So this is a big risk, the derivatives. And, of course, there is no regulation which stops the bank from calling in their debt. So it can happen any time. If they don't do it, perhaps for now, it is the means of self-protection. A gold frenzy happens before every crisis, and it happened before 2008, and it is now happening again. But now the banking deregulation is allowing every form of speculation in the interest of profit-making. It happens to an extent that is really insane. Gold is really a problem of the much larger scale. What I said is really insane. The banks are now issuing paper gold. They probably always had, but in certain measures. But now these certificates of gold far exceed the available physical gold. So there are certificates which sell future gold. Interviewer: what is the point in that? Peter Koenig: the point of that is that they are speculating with the gains they can make when they sell the gold in the future for less or for more as they feel fit. For the banks, it creates an asset if they have gold. You know, it is not physically available. Interviewer: but that is absolutely crazy. I mean, the whole approach, the whole structure goes virtual. Peter Koenig: that is absolutely right. It is crazy. And I think they get away with it because most people don't understand it. They don't understand what deregulation has done to their financial system, to our Western financial system. It is absolutely crazy if a bank can issue paper gold in one day of 80 tons, which is 10 times more than the average or estimated daily production of gold. The yearly gold production is estimated at about 2,400 to 2,700 tons. So these two components alone already mean a serious trouble. And they are kind of related because those people who are afraid of the derivatives collapse, they say, oh well, let's better buy gold. So they buy gold which they don't have and which doesn't exist and think, somehow we will manage, because once you have a contract, the contract is legal. So if a bank has to deliver the gold they don't have, but are committed to, then what does it do? It collapses, or it will be rescued. In 2008, the too big to fail banks were bailed out by the public money, basically by your tax money. This is no longer so. There is this so-called Dodd-Frank U.S. Banking Act, which says that the future insolvent banks have to rescue themselves by bail-ins, which means literally to confiscate money from the depositors and shareholders. And that also goes pretty unnoticed. This is the law that was passed in the U.S., and it has been recently also passed by the European Commission. So there is almost no way out. It's been rubber-stamped on the weekend of November 16th at the G20 meeting in Brisbane. The G20 has no international legal standing. They are self-nominated, self-designated group of countries, or rather their leaders, who have decided to rule the world. There is no UN resolution approving that G20 is a legal international entity, a decision-making organization. Nothing at all. The G20 can even decide to exclude a leader they don't like, as the G8 did, as we remember. Let's put that G8 is a concentrated form of the G20. When they recently decided that they didn't like President Putin, they just excluded him. And it is now called the G7. Terrible. So that's the freedom. They have absolutely no legal standing, yet they decide over the savings and the social systems that the people have worked for all their lives, how it should be managed, and when it can be stolen. This illegal group of the so-called world leaders, all of them, of course, follow the destructive neoliberal doctrine. So, have a Merry Christmas anyway. Thank you for tuning in for this week's Santu Pirls Stock Market Commentary, compiled by Donald Pearl, www.s2pmarketsignal.com. And we do indeed hope that you have a very Merry Christmas, hoping that your weekend has been pleasant and peaceful, and wishing you true success.